What's up, traders? Welcome back to my YouTube channel, and this is Phase 3. Now, today we're going to be talking about high bulls and low bears. So lately, I've noticed an influx of traders struggling to know when the high of day is locked in and when the low of day is locked in. Now, when I say high of day and low of day, I mean current day levels, all right? So these trades can happen off of previous day levels and current day levels. And when they happen off of current day levels, you want to see some type of resistance if you're looking for a sell. You want to see some type of support if you're looking for the buy. And I'm going to show you a couple examples of a high bull and a low bear so that you guys can be more confident when taking these trades. So if you look on US 30, last Friday, we had a first red day at the high of the week. So what are we looking for the next day? The pump coil dump or the trap and shift A top. All right. So if we zoom in, you could see that on the day, we have the high bull candle, the highest bull candle acting as resistance. All right. And when you get this high bull candle, it's important to note that you don't want it to be invalidated. All right. If it's invalidated, then it's not a high bull candle. Okay. So it needs to be the highest bull candle acting as resistance. So you get the pump, you get the coil. There's a high bull acting as resistance. You got the lower low on the inside. You're in the money. All right. So let me show you another example of a high bull. So literally the next day, this day, the trade from the first red day closed as a closing breakout. All right. So what are we looking for the next day? The pump coil dump. Our bias is sell now. All right. Have your high bull acting as resistance. All right. It's also right next to closing price, which is even more confluence. It should give you even more confidence on these trades. You got your pump, your coil. All right. The high bull is acting as resistance. You have your lower low on the inside from London. That's super important. If you don't have that in your playbook, I don't know what you're doing, but you got your pump, your coil, and then the dump. All right. These don't got to be big moves, guys. You can capitalize just off of these moves. All right. If you're using proper risk management, of course. Um, so that's another example of a high bull. So now I want to show you an example of a low bear. All right, so in this example, we have a low bear acting as support, right? So we got our closing breakout signal on Wednesday. What are we looking for the next day? It depends. What type of setup are you trading? Are you trading the reversal setup or the trend setup? All right. So if I'm looking for the reversal setup, I got the dump, the closing breakout, the coil. All right. So what are we looking for? We're looking for the low bear to be acting as support. So if I'm a New York trader, then this would be my low bear candle currently, all right? So I'll notice that price is literally respecting that low bear. Even if I was to put my line right here, it's still respecting it. All right? So it really doesn't matter. Like this right here is a W pattern, so this would have been obvious to me. But even just putting your line right here at the lowest bear candle, it'll be acting as support. It's acting as support. All right. It's not going any lower. You've made the low of the day. The low of day is locked in. So when I see this, a pump, what time is this? 9 o'clock. This is 9. Oh, yep. So we're on the hour. So this would have been the equity hour open. It pumped up. It made a higher high in the inside, higher high the inside of the EMA, dumped down, all right, and respected that low bear. Pushed back up, made a big wick, all right, and it's still closing inside the EMA. Then it gives you a nice pump up. You could have took that entry. All right. Another example of a low bear is here, actually the next day. So we had that first green day, Thursday. Now we're looking at a trade the next day, the dump coil pump or the trap and shift V bottom, right? So as you can see, we had the previous day's high triggered. It made a higher high, dumped down where to the low bear. All right. This is actually a peak formation that was made, but this is a low bear that it's working off of. So it dumped It hit this low bear and then it immediately reversed. Dump, coil. This is a structure candle, basically a coil on a lower time frame, and then the pump. All right. So that is another example of a low bear. What I also wanted to show you guys is that when you're looking for these trades, like say if you have a closing breakout, right? Whether you're looking for the trend trade or you're looking for the reversal, if you're looking for the reversal, you need to be up high. Okay. If you're looking for the trend trade, you need to be down low. All right. That's how you're going to know if it's a trend trade or if it's a reversal trade. So I just use those techniques because those really helped me strengthen my trades. So that's pretty much it, guys. This was a quick video. Just wanted to show you guys some gems on things that could strengthen your trades and give you a little bit more confidence when taking them. All it is just executing your setup on a daily basis. Price is not always going to be pretty. You're not always going to win trades. Everybody loses trades. But I've seen people with a 30% win rate still eat in these markets. Win rate doesn't matter. It's about executing your setup and having good risk management. And if you don't have good risk management, then that's a problem within itself. All right. So keep it simple. The market only does three things: breakout, pullback, trend, breakout, fail, reverse, and range. All right. It is currently 11:03. I'm going to take the next hour and enjoy my family for the New Year's. Happy New Year to everybody out there. I hope that you accomplish all the goals you have set for yourself because you can absolutely do it. Absolutely. So this is phase 3. I'm Q, and till we meet again.